one thing that can make it harder is just getting a grip on what's going on with the money. How much do you have? How much do you owe? How much are you spending? How much will you be spending? How does that all balance out? And that's where bookkeeping can help. What I'll talk about a little bit today, and I'll just share my screen here. Someone let me know if it's looks like it's working there. What we'll talk about today is just getting that foundation secured so that you have a sense of financial clarity, and then can have some financial data that you can use for a bunch of different purposes. The agenda for today will include the following things. Why having that strong foundation, having a good set of financial records is so helpful. The different ways it's helpful, and some of them are probably obvious. Some of them are maybe worth pointing out. We'll talk a little bit about the standard types of reports and ways that you can use the data that is generated in the bookkeeping process. And we'll talk also about what things look like when you start to have businesses in the mix as well. So if you have not just personal finances, but also business finances, what the intersection of those looks like. We'll also spend a couple minutes on what modern bookkeeping looks like. These days, if you're doing things the same way that you were doing them even 2 years ago, you could be taking twice as long to do the same work. The technology is really moving fast, and I can give you just a brief gloss on what's going on there. And then we'll leave some time for questions and discussion as well. In addition, feel free to jump in at any time if you have questions, something you want to hear more about. I'd be happy to go into more depth as well. Bit of background, Bookstime, we're a bookkeeping firm. We provide bookkeeping services for personal clients as well as businesses and nonprofits. And we're really excited to be partnering with Mickey and her team on hopefully helping make the financial side, the record keeping side of all of this a little bit less stressful. So let's start about the value of a strong foundation. What I mean by a strong foundation is a proper set of financial records. Why does this matter? How is this helpful? There are a lot of reasons. I picked out a few big ones here. One of the most obvious ones in this context will be that you have the inputs that advisors like Mickey, for example, would need in order to do their part of the advisory and strategic planning process to help support marital separation processes and anything else that may be going on. Without financial data, without clarity on the past and the present, it's hard to plan for the future. And even not just for the advisors in your life, but just for yourself, to know where you stand financially, to know what is your current net worth, but also what does your spending look like? What does it look like historically? What is it likely to look like in the future? To be able to plan for potential big cash flow events, if you know you have big expenses coming up, if you know a certain income source, something is changing there, to be able to project forward and see based on historical trends what's likely to happen in the future can be really helpful. Putting together budgets, tracking actual results against those budgets, this is all part of a disciplined financial planning process. And of course, it'll make life a lot easier when you get to tax season. You know, your tax accountant is always asking during tax season for any number of inputs and data points. When you have a complete set of books of proper financial records, that's all ready to go. You just share one file with your tax accountant and they have everything that they need. And there's also potential legal benefits for businesses to do proper bookkeeping. We'll get into that a little bit later, but not critical for now. Something that's worth clarifying is the difference between having a bunch of data, for example, in a virtual shoebox, in a folder somewhere, in a spreadsheet, versus having a proper set of books. When I'm talking about books, I'm talking about real financial records in some proper accounting software, something like you may have heard of QuickBooks or Quicken or Monarch Money. These are all popular bookkeeping options. But when you have just a bunch of data piled into kind of some repository somewhere without an accountant having organized it, compiled it, worked through it, you don't get immediate answers to questions from that data. So if you have, for example, all of your bank statements in a folder somewhere, that's great. But if you want to know how much you spent on a specific category, a type of spending, how much you spent on vacations last year, for example, that folder of bank statements isn't going to tell you. But if you have proper accounting software, you can answer a query like that very directly and easily. So that's where a bookkeeper comes in. That's where accounting software comes in to make sure that you don't just have data, but you have a way to organize it, make sense of it, and make it usable. So let's talk about the standard types of reports and forecasts that folks usually are looking for. And again, if I'm going too fast, too slow, feel free to jump in. I can go into more depth on any of these points if it's helpful. The following are some of the most popular reports that personal bookkeeping clients would be typically looking for. One of them, you might hear it referred to as a profit and loss, an income statement, or a cash flow statement. The accountants will cringe if you kind of refer to all those as the same thing, because technically profit and loss and income statement are the same thing. Cash flow statement is a completely different thing. But in the context of personal bookkeeping, just to simplify a little bit, what we're really talking about with all these terms is money in, money out. How much you're making in income, how much you're spending in expenses, and the difference between those. And this is a report that applies to a particular period. So you could look at this on a monthly basis, you could look at this on a quarterly basis, you could look at this on an annual basis, and you can compare different periods in that way. How much money came in that period, how much money came out in that period. The next type of report that's very popular, of course, is spending breakdowns. If you want to know more detail about how much you've spent on specific categories and subcategories and subcategories of different things. So, for example, maybe you want to have all of your past spending. You want to be able to see the breakdown of how much did you spend, for example, well, maybe how much did this particular member of the family spend in total over a particular time period. Maybe you want to know how much was spent on, for example, groceries or one-off kind of not likely to recur type expenses versus recurring expenses. How much was going into software subscriptions? All of this sort of thing you can get in any kind of spending breakdown. So you can really see where your money is going. Then we come to a balance sheet. So a personal balance sheet is different than a business balance sheet in important ways. If you're familiar with a business balance sheet, you have assets, you have liabilities, and you have equity. In the personal context, we don't really talk about equity. We're really talking about assets and liabilities and net worth. So what are these things? Assets, they're what you have. They're resources. This includes money in bank accounts, includes investment accounts, it includes potentially real estate, any stuff that you have, that's an asset. Liabilities, this would include things that you owe. So for example, if you have a loan, that could be a liability. And net worth is just the difference between your assets and your liabilities. So it's what you have minus what you owe. That's your net worth, roughly, at a particular point in time. I should say I'm kind of simplifying a lot of this. Like there's a little bit more technical detail, but it's not really relevant for our purposes today. Net worth and balance sheet, this is a type of report that is going to be pulled for a specific moment in time. You can think of it as a financial snapshot of where you are at a particular instant. It's not usually for like a time period. So if you're looking at cash flow in and out, you're looking at how much cash flow came in and out in a particular period, a particular month, a quarter, a year. If you're talking about a balance sheet or net worth, you're talking about it as of a specific date, right? Because you can't answer the question, how much money came in at an instantaneous moment, but you can answer the question, how much money did you have at an instantaneous moment, if that makes sense. So one of these is for particular time spans, one of them is for instants. We also have here flux analysis. Flux analysis is just a fancy way to say looking at changes, looking at variation from one period to the next. So if you're looking at last month versus this month, how much did you spend in a particular category? How much income did you have in a particular category? This is something that people like to look at, especially to look for anomalies, what's changing, what might be unexpected, or what might be the trends over long periods of time. Do you find yourself spending more and more on particular categories or less and less on others.
So do these tools to bring it from the finance into
Yeah.
those of us that are what would I call myself? Non-money manager, money managers and non-money managers. Um, the So like flux analysis, what's changing? So most of the people on this call are going through divorce. One of the archetypes, just patterns that we see
Mm.
is getting a non-money manager up to speed after never managing money.
Yeah.
Right? Like that is a huge, right? If you've never done that in your life, and all of a sudden you're going through a separation or a change, whether that's divorce or loss of a spouse or something you didn't see coming,
Mm.
even if you have managed money a long time. What are the any tips on that? Like getting people engaged in the education process? Have you seen things that work and don't work? Because man, that is of all the things I do, that is one of the hardest things to get that muscle going is
Yeah.
that transition of information from a money manager to a non-money manager. So with all of these tools, um, so good. How do you teach them to people? Is that
Yeah.
where the money coaches come in? Because it's a
Yeah.
practice.
Look, it's tough. I mean, it's a great point because there's challenges at two levels. The first challenge, when you start getting into the world of bookkeeping, especially if you haven't had a professional bookkeeper in the past, if you're kind of starting a little bit from scratch, or even if you have, some spreadsheets or some data collected, uh, if you haven't had a proper accounting software set up in the past, the very first challenge is on the incoming information side. So making sure that uh, you have complete data all organized in the proper way in the software. Just the very project of gathering all the data and figuring it all out, interpreting it, making sure that it's organized in the right way. Just before we even get to the other stuff, that's already a bigger challenge that I think some folks would expect. And
On our side, then that's the document roundup, just to make sure
right,
everyone's on the same page. So do we have everything that we need? And then getting that into the data room. So on
right,
everyone that's on this call, are you guys feeling pretty good with that? And we don't have to answer now. I'm just planting the seeds, right? Of like, where else do we need to offer support on that journey of getting all the documents into the data room? Because that's really that first, right? Is like, how do we get organized? Well, we got to get the information. I call it the safety net of facts. And then once we have that safety net of facts, just to make it a little to loop the language I use to the language you're using and introducing today is I use the ABCDs of cash flow. Like we're going to do your balance sheet, which is what you owe and what you own, and getting all of that organized. And then you've got cash flow in addition to that. Like, how is that going? And so um Ella is starting to get better at when she sees the statements to be able, she can summarize now. She can see all those statements and give you kind of like how much money was spent in the last 3 months. And she can grab that and do pretty good. And now we have to get her better at identifying how to do the ABCDs. But that's where Jesse's team comes in, is really helping on that side of getting it organized in a way that you can recognize the patterns. Like I want to just like for the non-money managers, like there's generally patterns. 70, what is it? 70% of those patterns won't change. And so Books Time is a amazing team and tool. If you're not a money manager and doing like forecasting and balancing and doing reporting and all that, like you can delegate that to a team that's really good at it, and that's what they love to do. So that's my non-money manager translation for those on the call that are going, whew, those are a lot of big terms.
thank you, Mickey. And I just want to address the other side of that as well. So that was all about the kind of incoming data, like getting everything organized so that we could start pulling reports and starting using the data. And this is where partnering with a company like this, like we know, I mean, it's really and what Ella's role in this will be is really cool because it helps streamline a lot of that process that we were just talking about. Um, and then the next big challenge, even after all the data is collected and it starts to get organized and interpreted, is Mickey, coming back to what you were talking about before, is when there's this kind of new first exposure to getting into money management, how do you kind of learn things and get comfortable with things? And there is this process that just takes a little bit of time and work where ideally between um, ideally there's a professional who knows this stuff and loves this stuff and is kind of in the weeds of the world of accounting on a daily basis and very well versed in this, who can help translate a lot of the kind of technical details in a more digestible way for someone who's perhaps newer to it. And that can reduce some, not all, of the challenge level involved. Uh, but I think in all cases, there is some challenge level of just uh, getting used to reviewing types of reports that maybe reports that are new, figuring out how to understand the kind of numbers that you're looking at and how to make use of them. That's something that a financial professional, an accounting professional can help with. And they can explain things and walk you through things. But at the end of the day, there will be some kind of novelty there. There will be some kind of learning curve. And the important thing is to have someone there in your corner who can help you through that learning curve. And once you get through it, then great things can start to happen. You get to start to have that financial clarity, that really knowing where things stand and what to expect for the future, understanding the past of patterns and how they can, as Mickey was saying, like 70% of the future can probably be predicted based on the past. And it starts to be a really powerful tool. But it does take some kind of time and investment of energy and attention and some kind of comfort, some kind of getting comfortable with new things that, yeah, it can just take a little bit of time.
So this is Andy, and I just apologies for the interruption. So it looks like we've got 10 minutes left. And I do have a 3 o'clock meeting I need to get to. Um, Typical for me whenever I'm giving a briefing, I have a hard time getting off the first few charts and getting to the end of the briefing. But I think this is the topic, so I'm maybe preempting myself. This is one of the topics, and maybe it's a future topic, is I've got personal budget and working out that with the division of assets and that kind of thing. But then I'm looking to the future of maybe starting my own business.
Mm.
And the thing that I highlighted when I wrote down my notes was you know proper documentation, which we just kind of talked about, is knowing what that means, and then the legal benefits for business.
Yeah.
So if we don't have time for that today, we have a second, a chance to have that as another topic. But I will be dropping off right at 3 o'clock.
Well, what I could do is maybe just the 30-second version for now. And then if you want, we can have a kind of follow-up conversation and go into it a little bit deeper. As a preface, unlike some other people who might be on the call, I am not a legal expert and I don't give legal advice, and this is not legal advice and all the necessary disclaimers there. Having said that, what I would say is that proper bookkeeping, proper financial records can be extremely valuable for a number of purposes, including, and a proper legal professional could tell you more about this than I could. But in terms of protecting the corporate veil, if you have too much mixing of your business and personal records or financial institution, your payment methods, your financial accounts, if you mix these too much, what can happen is that a court can decide that uh, the legal protections that are normally afforded to the business as like a separate thing from you personally, maybe they don't actually apply. And you don't want that to happen. And likewise, in the context of a lot of the of what you may be going through in the context of what we're talking about now in terms of marital separation process, it can also be extremely helpful to have a very clear separation of this is personal and this is business. And maybe you want it to be very clear in all the financial records which is which. And even beyond those legal benefits, there's also just, you probably just want to know, like, what is really how much money the business is making versus how much am I making personally. Of course, there are tax benefits to this as well. So without getting into too much detail there, and again, I would, that's the kind of thing where for more of the legal technicalities, I would advise to talk with a legal advisor. For more of the tax technicalities, you have to talk with a tax advisor. But the big picture is you want to avoid this thing called personal business commingling, where financial accounts or financial records are mixed together between between the individual and the business. That can lead to all sorts of really bad problems.
And does Books Time have an audit ability, or is that something you guys send out if there
Yeah.
is?
You need you would need a special auditor firm, an audit firm, and it would have to be a CPA firm. We're not a CPA firm, so when it comes to tax advice and when it comes to audits, any kind of attest services, attestation services, those are all things that would be beyond what we would be the best fit for. Where Bookstime really comes in is making sure that you have that strong foundation of accurate and complete financial records and some accounting software, so that all the other advisors, the legal, the tax, the we know type advisors have that basis on which to advise, have the data in a easily usable format.
And I had one other question that tends to pop up. One of our top questions. Yeah, this comes around the organization. So I think one of the things I commonly see, right, is I think in small business, commingling can be quite common. It
Very
just
common.
gets more and more expensive on Bookstime's team, right? So that's where they'll have a big chunk every month when they go to reconcile, that if it's not identified as a business expense, you have to pay someone another chunk to help you reorganize that and re-book it. And so when you're using these automated tools, having multiple bank accounts, right, where you start to see those patterns is really helpful, I think, for families who are also looking at either starting a small business or having a small business. Because then it just starts to create those lines and keeps Bookstime's fees organized and more manageable.
Yeah. And on that topic, that's actually a great point, is there's two things that can really help reduce the extra work that can be generated when there does need to be commingling. One thing is to have someone handling the books who really knows about automation opportunities, because you can set up rules in accounting software that say, if the transaction meets criteria 1, 2, and 3, always categorize it like this, for example, as business or personal. And if the bookkeeper is doing that kind of thing always manually, it's not always necessary. It can rack up unnecessary costs. And so the kind of automation expertise can really pay off. And on a similar note, I would also say that there are real benefits to having the same bookkeeper long term, because they get to start to see these patterns, like the kind of patterns Mickey is talking about. You get to start to see the things that are the same from month to month, from quarter to quarter. They get to start to know the ins and outs and be able to predict without having to bother the client to ask for clarification. For example, this is business, this is personal, this is this category of spending, this is that category of spending. So that can be quite beneficial. I think we're running a little short on time, so maybe I'll skip most of this, but just to kind of sum it up, there are two main accounting software options that are relevant for personal bookkeeping clients these days. QuickBooks Online, which is by far the most popular accounting software for better or for worse in the US, and Monarch Money, which is a little bit more of an upstart, a new player. Monarch Money, way more limited, but very nice if you have a lot of, if you need very detailed investment tracking, that's where it really shines. QuickBooks Online, much more powerful, not designed specifically for personal bookkeeping, but it's general purpose enough that it can be used for it. And allows for a lot of automation, which is one of the reasons that accountants and bookkeepers tend to love it. I'll skip over the rest of this for now. Oh, that was the last slide. So we're on to questions.
Yay! Good job. I like your slides with the automation.
It's actually the slides are semi-automated as well.
That's brings all of them together. So I'm going to plop Jesse's information in the Money Circle forum. So those of you that, oh, there it is, that want to follow up with Jesse to help organize your money. Again, I think some of the things to know are the reason I think it starts at $299 a month, which is really a very affordable price to get started. It's kind of a no-brainer. And then they'll start creating your custom plan and what your team looks like. And so they do use international teams to help keep those costs down. But I've enjoyed working and getting to know them, and think what they offer is a really good relief for just starting to build a team at an affordable price rate.